Why was the first stock exchange established? Imagine a bustling marketplace in Amsterdam during the early 17th century. Merchants and investors gather, eager to trade shares of a revolutionary company. This company is the Dutch East India Company, established in 1602. It was the first publicly traded company, and its creation marked a turning point in economic history. The primary reason for establishing the first stock exchange was to facilitate the trading of shares in this ambitious company. The Dutch East India Company needed to raise significant capital to fund its costly and risky overseas trade expeditions, particularly to Asia. By issuing shares to a broad pool of investors, the company could gather the necessary funds to support its ventures. Before this innovation, trade was often financed by individual merchants or small groups, limiting the scale of their operations. The establishment of a stock exchange provided a formal marketplace where shares could be bought and sold regularly. This created liquidity, allowing investors to share in both the profits and risks associated with global trade. A key feature of the Dutch East India Company was its limited liability structure. This meant that investors' risks were capped to the amount they invested. This innovation encouraged more people to participate in investing, as they no longer faced the threat of losing everything. The first stock exchange in Amsterdam evolved from earlier commodity markets into a sophisticated securities market. It became a hub for merchants, investors, and speculators to trade shares, bonds, and commodities. This not only supported investment in overseas voyages but also local businesses. Over time, the stock exchange developed mechanisms to regulate trading, reduce fraud, and increase transparency. These advancements laid the groundwork for modern financial markets. The establishment of the stock exchange was crucial for the Dutch Republic's economic expansion during a time of geopolitical conflict, including the 80 Years' War against Spanish rule. In essence, the first stock exchange was established to enable the Dutch East India Company to raise capital from a wide range of investors. It provided a centralized marketplace for trading company shares and other securities. This innovation spread financial risk among many investors and supported economic growth during a time of war and expanding global trade. The creation of the stock exchange marked a shift from fragmented financing to organized capital markets. This transformation has shaped human economic development ever since, making it a remarkable milestone in exploration and human endeavor as well as governance and economic systems.